Good day. Welcome to the channel of SA Accounting Network. Today, I'm really privileged to have my friend Jasper Basson with me on the channel, and we're going to be talking about everything relating to the tax returns 2022 and what you should know as an individual on your tax return. So I think, Jasper, maybe do you want to introduce yourself quickly to my viewers?
Thank you, Heinrich. Thank you for having the opportunity to chat to you again. We've done some previous ones as well. My name is Jasper Basson. I've got a tax practice in northern suburbs, and I'm also working remotely from Wellington. The practice name is Drake Holdings, and I've been very privileged to serve small business owners for just over 2 decades now.
Yes, I think what's really nice, part of the SA Accounting Network, the website of the channel that I've got, is we actually have a network of accountants all over South Africa where we always sit and chat about tax issues and bounce ideas and stuff off each other. And obviously, Jasper is also a YouTuber, and there's something that the common interest that we share. And so that's why I decided when I wanted to do this video, I said, no, man, let's put Jasper in as well. He's always got a lot of good insights and stuff, when it comes to all tax matters. So that's why I decided to do the collaboration with him. So maybe this is a starting point, Jasper. What changed? If you had to look at the previous years, the tax returns 2021, now we jump to 2022. There's been a lot of shuffling around and stuff. What is the issue? What changed in the 2 years?
So I think we've come a long road. I think, especially the two of us that I know that's been in the game a long time. It came from humble beginnings of filling in the tax return by hand. Then slowly but surely starting pulling in information using AI to kind of pull in information. And then last year they actually started with this SARS auto assessments, where they actually started pulling in a lot of the information and then populate kind of a auto assessment for you, but that you had to go in and verify and check and actually then submit your tax return. Since what we've seen in 2022 now is that they actually do the same thing, but they actually do an estimate tax return that they actually submit on your behalf. So now the onus is on you to actually go in there, and if there's any changes, then you have to edit that and then obviously submit the tax return again, which obviously have its further risk and certain issues that we can discuss further. But I think the biggest thing is the estimate auto assessment that they issue, and if you don't go edit that and obviously put your attention to that, you can get into a place where you can't do a notice of objection after a certain period of time, and then you have that issue that it might be a final assessment which might be wrong. So I think it's very important to note that.
Yeah, for sure. I think, you just talked briefly about risk. I think that's something that we must maybe explore a little bit in the video is, what is the risk? And I think one of the biggest things, one that you also mentioned, is that such issues you with this assessment. A lot of people don't even know about it. The next minute they say, oh, here's 15,000 rand in my bank account. They start fighting around or check the references and they realize who was the receiver of revenue. And now they think it's a done deal because SARS did the work for them. But I think the risk is that if you look at on the news, I think they moved the deadline a bit earlier this year. I think the deadline was moved forward to the 23rd of October because of this auto assessment process. But I think the risk is that you get the refund and you just think, okay, I still have some time until 23rd of October to go fix it if anything is wrong, even if you do remember to actually look at your tax return, because in your mind you've already done it now. And I just checked on the website this morning, they talk about 40 business days is the time frame that we have to file a correction. So I think in terms of risk, I think the first thing that we need to make the people aware of is that they must make sure that their contact details is correct. Otherwise, SARS is going to issue these assessments. And if you miss your 40 days is over and then you're stuck. And the problem is because we're going to talk about the process just now as well. But the normal process, if you have to submit the tax return, there's 15 steps that you have to go through. Now, the receiver of revenue goes and does step 10 out of 15 for you and automatically assume all the other 14 steps are done. And that is not the case. So I think that is where there's a big risk. So the first thing is contact details. I think that's really, really important. Another thing that I just jotted down as well, I remember I had a case a couple of years ago with bank details. The thing is, you assume that your details with the receiver of revenue is up to date. And we've had it in the past as well, where people contact us and say, listen, I changed my bank account or something like that. Should I update? And we always used to give the people advice, no, man, let's wait until we do a tax return, then we update everything at once. But now SARS issues the guys with these auto assessments, and they just pay the money out to whichever bank account is on the system. So I think that is a real risk there. I remember one story that I had. There was a girl probably about 10 years ago where I did a tax return, submitted the return. I think she was due for a refund of about 10,000 Rand, gave her the date when it was supposed to be paid out. Like a week later, she phoned me and said, listen, the money is not in my account. So we start digging around. I said, what bank details have you got? Oh dear, she opened up a new bank account. She was sequestrated. So the money paid into the wrong bank account and the money was just gone. She never saw that money again. So I think that, to me, is one of the biggest things. Because in the past, I mean, with our accounting practice, if I did tax returns for people, we would obviously do the calculations. I would phone the guy, then verbally confirm everything, confirm the bank details. I always make sure about that before I press that submit button. Now, SARS just does it for you. If there's some weird bank account on your return, you won't even know about it. And especially if your contact details is up to date, because now, October, you think you've got to file your return, you open it up and you say, listen, but SARS submitted this thing the 1st of July, and your money ended up in somebody else's account, possibly. What do you think?
Yeah, I think SARS really made it so easy these days to update your details. I mean, whether it's through your tax practitioner, whether it's with your own e-filing, if you do it yourself, you can go into your organization details, you can update your banking details, you can update your address, your email, your cell phone number. So there's actually no excuse for you to not receiving your refund in the right place, not getting proper communication, because it's either need to go to your practitioner or to yourself, and you can very easily verify that detail by yourself online.
Yes.
So definitely.
Yeah, for sure. So we were talking just now about missing information. You know, in terms of risk, I think that is a very big thing. And what are some of the things that you can think of that people who would be missing on a tax return?
So I think the first thing is SARS do the estimate on your behalf, and they submit the tax return on your behalf, and then you still have these potential that we can talk about now, but potential additional income that you need to declare. So you have two options there. You can either go edit the return and then obviously declare whatever you need to declare. Or some people might think, well, I'll put my head in the sand, and SARS kind of forgot about my capital gains tax or whatever the case may be. And it's so easy because SARS already submitted my tax return. The problem with that is the risk on that side is that SARS can always come back for omission of income. And I mean, the omission of income penalties, I mean, that is 200% on the actual tax that you had to pay. So you can end up paying 3 times. I mean, that's when you're lucky and not get any other prosecutions or anything else, but 300% of the amount that you had to pay SARS can become due with penalties and interest, but just additional interest on that. So I think that's the one side of that, is you can potentially risk have that kind of temptation of not go edit that return, and then you have the issue with the penalties if SARS do pick it up. And with third, I mean, we also talked about that previously, but third-party appointments and third-party information that SARS do have access to. I mean, that's with, again, AI makes everything so easy for SARS to access. Everything pulls through. So even if they ask you for something, they generally already know that information before, and they're just making sure that you're actually speaking the truth or not. So I think that's just very important to note on the one side. On the other side, the potential income that you might receive additional to that will not pull through on on e-filings. The one thing I've noticed is your interest, your IT3B interest certificates actually pull through to e-filing, and like previous years as well, the capital gains tax, IT3Cs, actually also pulled through. And this year, it seems like there's like I don't know if there's a glitch in the system, but it seems like there's a lot of capital gains tax certificates that actually doesn't pull through. So if you do trade in shares or having a share portfolio, any of those kind of items that used to pull through, maybe just make sure that that actually has been submitted or pulled through on your tax return. Then if you have property investments for your rental income, or obviously for the capital gains tax on selling of a property, you will definitely need to attend to that separately from the auto assessment. The buzzword crypto tax, most people made a massive profit maybe in 2001 and 2002. Maybe in 2023 there will be a lot of losses again, but you have to attend to those separately, and that's a topic of obviously on its own, crypto currencies, or crypto tax. But I think just for me, for the record for now, and then obviously if you have a part-time business, you might be a sole proprietor, you receive a salary on the one side, SARS done the auto assessment on that, but they don't necessarily know currently about you being a sole proprietor as well, or you being part of a company where you have shares, and you draw some income from there as well that you have to declare on this side. And then lastly, if you're a sole proprietor, if you have rental income, if you're a director of a company, you also need to submit or declare your assets and liabilities to SARS. So yeah, that's a mouthful, but that's kind of the things I can think of quickly of items that will not pull through on your e-filing return.
Yes, no, I think two things that I maybe just want to add there as well is you just touched briefly on the thing about third-party data submissions. It's quite interesting that the receiver of revenue, every 6 months, they receive a report from various institutions. One of them is the banks. And another interesting thing is estate agents. Those guys report through to the receiver of revenue every 6 months on your rental income. So they actually know what rental income received before you actually submit your return. And with banks, it's quite interesting as well, because you might get an RP file that says 100,000 Rand for the year. They get a report from the bank. They say that 500,000 Rand went through your bank account. So now if you just go and submit, also the receiver of revenue presses submit on your behalf, and they only have the 100,000 Rand in, afterwards they come back and say, listen, dude, but there was 510,000 Rand that went through your account. What now? You're still the one that's going to be responsible, because they said that you were supposed to go back within 40 working days to make that correction over there. So on the one side, it's almost a little bit unfair, because it's like me saying, I'm doing this thing on your behalf, but if I do it wrong, you're the one that's responsible. You're the one that's going to be in trouble. So it's almost, it makes me think of the toll fees up in Johannesburg, where they just build these big news highways and stuff. And you just check all these funny things coming on the highway, and the next minute they just started listening to it. We built this thing, now you have to pay. You want to pay or not. You get the benefit of using it, but now you've got to pay for something that you didn't want. So I think it's a very similar.
100%. I think this new estimate that they already submit is I think there's a risk for both parties. I think there's a risk for the client, but there's also a risk for SARS. And yes, SARS can go back. They have got all these third-party information that they do have, but that to go back to assessed tax income tax return has already been assessed, it's additional trouble and input from SARS as well, because now they kind of take away that opportunity for a client to actually file the information that they had to. Yeah. So I think there's a risk on both sides in this whole thing, but I think it's also a start of something new. So I think there would be a few glitches as we go along. But if you've been as long in the industry as the two of us, as including a number of other people as well, then you would know that where we came from and where we are now. I mean, there was always some issues along the way, but I mean that's leaps from where we come from. Yeah. So I think I really appreciate the opportunity and to be part of this, and also I like this whole new idea of working with SARS remotely. I can do online appointments. I don't have to visit the branch. I can sit in my office and have a call with them. So I think there's a lot of new, amazing, beautiful things happening. And I think regarding tax returns, the days for a tax practitioner are gone, where you just think you're kind of a tax practitioner that just file tax returns. Yes. I think that the time for a tax practitioner is here too, and that's the same for the view of the clients. You are there to add value. You're not there just to tick a box. You are there to add value. So your value is, I need to wake up and I need to make sure that my client's tax return is actually correct. And ticking all the boxes, like we just discussed, with all the additional income. So, yeah.
Yeah, for sure. You touched on a point now quickly about tax practitioners. I think, do you think they're still relevant? Is there still room for tax practitioners the way that the receiver of revenue is going now?
Yes, definitely. I think for the typical taxpayer that receive IAP 5 or maybe 2 with medical aid and retirement annuity, and maybe some interest, that there's no value that a tax practitioner can add to that transaction. So it's an auto assessment done by SARS, and I think in most cases it would be 100% correct. Whether you check it or not, and maybe your contact details might not be right, but at least the tax return would be correct. The value of the tax practitioner is really in the way where you actually give input and value to your client. So, I mean, make sure that if there's a tax assessment and you know the client do receive rental income or do trade in crypto, whatever the case may be, that you make sure that you're on top of it and as quickly as possible get the information from the client and then edit the return if necessary. Yeah. So that is that kind of that watching eye that you need to be as a tax practitioner.
Yeah.
So, and I don't think that it might be over time the rental income might also pull through, but there will always be value that you need to give as a tax practitioner, and I think it just become more and more important as we go along through the process of together with AI.
Yeah, for sure. Yeah, I think, I mean, with our practice, that's the 21st of July, so we had a little bit of a feel of what's coming up with the tax season currently, but some of the people that I've interacted with just contact me and say, listen, but SARS already pressed the submit button for me, why should I pay you? Because they already did the work, so I actually did a bit of an exercise a while ago, I think beginning of the month, just to see what the value it is that we're actually adding to them and what the process is that we have to go through. So I made a list of 15 things that I'm maybe just going to read through quickly, the process that we as tax practitioners have to go through when we file a return. And the fact is, at the moment, SARS did step 10 out of step 15 on your behalf. But the fact is that you still need to do the other 14 steps to make sure that your return is accurate. So maybe I'm just going to read through it quickly. So the first step is obviously for us as a tax practitioner, we've got to contact the client, then we've got to send them a letter, power of attorney and engagement letter, and we send the guys information letters, which is a long questionnaire where they have to go through to make sure that they declare all the income to us. So I think that's already the one risk of just working with the auto assessment, that you're going to miss half the information. Then after that, we have to scrutinize and compare the previous year's return to make sure that everything that we had in the previous year is still there as well. Log into e-filing, request the return, and compare the information that you received with the actual information that SARS has on the system. Update the return with any missing information, run the calculation, phone the client or send the Loombi video with the discussion of the calculation. Then step 10 is to actually submit the return, which SARS did on your behalf. After that, we still have to save the assessment and see whether it was selected for verification, go through the whole verification process, give feedback to the client on submission, email the assessment and the invoice. Following day, request a statement to find out the refund date, and then obviously follow up on the refund. So there's actually quite a few steps, in the process itself. A lot of people think, no, the guy just presses the button and that is what I'm paying for. But if you look at what actually happens in the background, there's 14 other steps that needs to happen before we can say, okay, now we've done your tax return and we're happy with the assessment. So I personally also think that there's still room for tax practitioners. I think if you've got a very basic return, if you're just working for one guy, earning one salary, there's nothing complicated, then I think it's fine. Then you can accept that auto assessment. But I think as soon as there's anything funny, we didn't even touch on donations today. Donations is also one thing that the guys can claim that SARS doesn't know about. So you actually physically have to go put that type of stuff in. So I think there's definitely still room for tax practitioners out there. Now, any final thoughts, Jasper?
No, I think it's I'm working with estates a lot, the estate tax, the final tax as well for the estates, and you see a lot in those returns that we have to do. Like all of a sudden, there's like 5 or 10 years that's outstanding of a client. So, and then the the people that are left behind need to kind of sort all those tax returns out. And it's always difficult, especially, I mean, from a tax practitioner point of view as well, when you start need to do that, and it's like there's no, the person that you need to ask for is not there anymore. So I mean, you need to get information that's very difficult. So I think it's just very important to keep your tax up to date on an annual basis, even if it's simple, even if it's a simple case. Just make sure that your auto assessment does go out, make sure it's correct, that you don't have an issue in a few years, whether you're still here or not. Make sure that, I mean, you don't want to answer things 5 years later in your life. And so verify it on an annual basis. And if you have some complexities in that, reach out to a tax practitioner and just get some assistance.
Perfect. Yeah, thanks, Jasper. Yeah, so once again, thanks, guys, for watching the video. Remember to give it a like and subscribe to the channel. Go check out Jasper's YouTube channel as well. I'll share the link in the description of the video. And yeah, keep your eyes out for the next video. Thanks for watching.